Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 27th of January, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. We're going to go for our usual Monday run through, which is slightly different. We take a look at a slightly bigger picture view, where we take a look at what we like to call the shape of the week. So looking both back to last week, what were the main macroeconomic, central bank, geopolitical events that shaped markets, and then also looking forward into this week for the same. We'll also run through the major news headlines, what's going on in financial markets right here, right now. Quite a lot of price action already in here today. Significant sell-off in markets. We'll talk about that. And then we'll take a quick look at the charts as well. So let's take a look back before we look forward. So we had a notable push higher last week in stocks with the S&P in a new record close on Thursday, primarily driven by Trump's pro-business comments. Assisting equity gains. Earlier in the week, though, we did get Netflix stock surging on strong revenue and subscriber numbers. And also then at the end of the week on Friday, we had the US flash PMI data, important data, but kind of mixed. We had both positives and negatives on the manufacturing and service sector. Looking into this week, we have a whole host of stuff going on. So we get the Fed, we get US PCE data towards the end of the week. Which is the important inflation data that the Fed monitor. And also we get big tech earnings in focus with 5 of the Magnificent 7 reported. So you can see all of this in the Macro Matters reports. Remember, those are below where you're watching right now. If you're watching in the members area, the column in the central column of the 3, left-hand column, the technical analysis reports that are up daily from market charters. The central column in here, the trade day Macro Matters and macro summaries. If you don't want to read through all of this, there's like 3 pages of this and then the table, or nearly 3.5 pages in the tables in here. You can go and look at the macro summary, which is just bullet point summary running over 2 pages in here. So you can take a look at that. They are in that middle section. So they go up every weekend on Saturday or Sunday at the weekend. So you can take a look for the week ahead. The macro summary and the macro matters. So left-hand column is the technical analysis reports and market charts that go up daily. We'll look at those just shortly. And then we have the right-hand column. We have all our news, our daily news coming in from our partners at LiveSquawk. So take a look at that as well. So let's take a look into this week. What do we have? Well, on the central bank side, it's a busy week. We get the Fed is obviously front and center. Now, remember, we're not expecting anything really from the Fed. You can see that. We go to the CME Fed Watch tool in here, 97.3 chance. It just dipped slightly off of 99. But 97% chance that we don't get any change going into this meeting, and no change expected either in the March meeting. Really, you see a 60% chance now of markets being unchanged, but we're certainly looking for a rate cut potentially by May in here, so more like a 60% chance. So between March and May, we're expecting the first rate cut in here, and then another one by the end of the year. If you see in here, we're pricing in now by October, and this has increased slightly. The chances of more significant cuts earlier on has increased because of the price action we're seeing this morning. I mean, the Fed won't really worry that the stock market's down. It's not in their remit, but the market is pricing in a slightly more dovish tone from the Fed because of the sell-off we've seen this morning, which we'll talk about a little bit just shortly. So going into this week, we get the Fed. So the data is fairly light in here today. We did have Chinese PMI. We've got German IFO reports coming up, already out today. Nothing really from the US today. US durable goods orders of consumer confidence. Going to keep an eye on those tomorrow. But bigger picture, the focus is going to be on we get the Fed, as we said, on Wednesday, and also get the Bank of Canada actually, incidentally, on Wednesday as well. And then Thursday, we get the ECB. So the ECB as well. So that's the important stuff on the central bank side. We also get minutes from the Bank of Japan as well. So we've got the Fed, the Bank of Canada, and the ECB in play between Wednesday and Thursday. Bank of Canada monetary policy meeting minutes from last week's meeting on Wednesday as well. On the data side, I said the US PCE numbers Thursday and Friday. Well, the Thursday numbers, we get the quarter-on-quarter numbers with the GDP number. Those are not as important. The more important numbers are those month-on-month, year-on-year numbers from the PCE. We get those on Friday. So that's going to be a significant end to the week. We also get other data of note in here through the week in here towards the end of the week as well. German EU US GDP Thursday, and Japanese and German CPI on Friday. So some important data from outside of the US also at the end of the week. So all of this is, you see, clustering towards really Wednesday onwards with the central bank meetings, and then the big data, PCE data on Friday. Even the non-US data is Thursday, Friday. So most of all the big stuff is coming from Wednesday onwards, really from the Fed onwards. We're seeing that. Now, the other big thing in here is we do get really getting into the meat of the earnings season. We get 5 of the most magnificent 7 stocks. We get Microsoft, Meta, and Tesla all on Wednesday. Apple and Amazon on Thursday. So it's a massive week for big tech as well. Huge week for big tech. So, normally in normal situations, I would be saying, well, it's likely to be quiet for the first couple of days of this week. And then things really start get going from the Fed onwards. And we're going to be super busy with all those earnings, the 3 central banks in play, plus that PCE, GDP data from the US on Thursday, and the PCE data on Friday. And then obviously we've got all of these earnings. There's the earnings there. We also got ASML as well in here on Wednesday, and then Friday, Thursday, Apple and Amazon. So it's a massive IBM as well in there. So outside of the Magnificent Seven, there's still some other big names reporting in the year as well. AT&T today, Louis Vuitton, but real focus is going to be on those Magnificent Seven Wednesday through Thursday. So normally we'd say it's going to be a quiet start to the week. However, given what's the price action we're seeing, and we'll talk about that shortly, we're going to see far more significant price action today, maybe running into tomorrow. So February, we've already gone through that, and there's the Fed, there's the data in here. We have the IFO data out of Germany, slightly better than expected. You see nothing really of note out of the US today, and there's all those earnings reports. We've already run through those. So the big focus say Wednesday, and these are all after the bell. Remember, all after the close. The big tech, Microsoft, Meta, and Tesla, ASML as well, all on Wednesday. Apple, Amazon on Thursday. But if we go actually to refresh this page, see if they've updated this. So DeepSeek is the tail that we've had over the weekend. So threatens to shake up US tech dominance in here. So the buzz around Chinese AI DeepSeek. So this came out through the weekend in here. AI disruptor, Chinese startup DeepSeek rock the AI sector, raise a question about US tech dominance, casting doubts of sky-high values for companies such as NVIDIA. So it's a low cost model in here from DeepSeek, which is now the top app on App's iPhone download chart. So really significant. This has just come over the weekend in here. Cheaper version of effectively like ChatGPT, etc. Just throwing a big spanner in the works for the kind of US dominance that we've seen of the AI and big tech in here. So that's going to be significant. Stock tumbled. Chip giants, NVIDIA and ASML, both of which benefit significantly lower, leading the downward spiral. I'm not sure the numbers on these. So NVIDIA will plunge. What are they in pre-markets in here? NVIDIA down 9% in pre-market. ASML down 11%. So significant sell-offs in here this morning from those. So this is what's grabbing all the headlines in here this morning. Now, the one thing I do want to say in here is about I've got it on the in the members area as a headline in here. So you need to have a look at this FAQ, guys, on the circuit breakers. I'm going to share this in here now. If you're in a funded trading account, whether you're in funded sim or funded live, you need to know this. The CME have circuit breakers for the so if you're looking at the S&P and the Nasdaq, and they kick in the first circuit breaker. There's 7%, 13%, 20%. So 7%, the circuit breaker kicks in. That means markets stop trading, okay? 15-minute trading halt if the market hits a 7% down. So the market stops trading if it hits 7% down. Now, it hasn't hit that this morning, but a trade day to keep us safe. We have all funded traders not permitted to trade if the market moves within 2% of a price limit. Well, the price limit, as I said in here, is 7% down. So it's 5% down. So if the market moves to within 5% down, you cannot trade. If you're in a funded sim or funded trade, funded live account, if you're seen to be trading with the markets, with the Nasdaq or the S&P down 5%, you will lose your trading account in here. Look, traders in breach of this policy will lose their funding account. So please do not trade if the Nasdaq and the S&P are down 5% in here today. Please stop trading if you are on a funded account. Okay, very important. So yeah, I mean, so it's all about the deep seek in here, and there are some other bits in here, but really nothing significant in here. It's all about the deep seek and the way it's triggered the sell off in, I say, Nvidia and ASML, plunging lower in pre-market. Nasdaq futures were down 5%. They were already down 5% in here at one point this morning. So funded traders should have stopped trading at that point, and all the headlines are around this in here. Nasdaq futures sink 5%, but they've rebounded, and I think personally, I think the market's going to rebound from here. I think we'll see loads of real money accounts coming in and seeing this as a great opportunity to buy these stocks. Nvidia potentially 9% off in here, as a massive discount, because I do not think this is going to be a massive game changer. Yes, it's a bit of a wobble, but these stocks are strong for a reason. I think there's going to be plenty of buying coming in. My view is we get a bounce from here. So I think we've already seen a bounce. I think we're going to get a bigger bounce in here today. What is China's deep seek, and why is it freaking out the AI world? It's all it says: morning bid, AI. Nasdaq futures tumble as China's AI push rattles big tech. Tech drag global share. It's all the same stuff. And if you look, Asia not down at all really. Hang Seng actually up slightly in here, 0.6, and the Nikkei only down 1%. Futures in the US, in Europe, down. The FTSE's only down 0.25% in here. Not a big tech weighting in the FTSE. The DAX and the CAC in here down just either side of 1%. But if you look at this morning at the moment in here, just going to refresh this page for where we are now. We're down just under, so we're down over 5% in here at one point in the Nasdaq. We're down less than 4% now, so it's already rebound. S&P was down over 3% now, 2.25% down, so significantly down. I think we're going to get a strong rebound from here. We've already run through all these price limits in here. Please do be aware of those, guys. The price limits in here say 5% down. Please do stop trading. And then the other thing in here, you'll see the big rush into bonds. So bonds have gone up in price, down in yield, as this is just unnerved markets in here slightly. So yields have gone lower. That should be good for stocks in the long run. So lower yields in here, and we're breaking into this important area in the 10-year between 4.8 and 4.5%. So there is risk we get an even deeper acceleration lower in bond yields. Long term, that would be better for US stock indices. And I say it's kind of reflected here. These in here, we're seeing a far more significant move towards more rate cuts in here on the CME. It's not huge, but significant, and that's just because the Fed are not going to move. They're not going to worry that the stock market's down unless the stock market crashed. But the stock market shows no signs of that. It's just this is a significant correction on one data point. So yields are significantly down, and that's going to keep in here our view, which is bullish on futures in here across the board, 30s, 10s, 5s, 2s on the bond markets here, the bond futures. The markets here, obviously, this was written at the weekend in here, so we was nothing but bullish in here, even though the market was just slightly lower. At the end of last week in here on Friday, we saw a slight sort of sideways dip. But nevertheless, in here, markets, the S&Ps, the cash market made a new all-time high. If we look in here, a lot of big, we wiped out literally all of the gains from middle of January in here, wiped out in here. That's the Nasdaq, and on the ES. Now, but importantly, on the Nasdaq, you can see we did hold this swing low. We rebounded ahead of this swing low, which held at this swing low over here, and we've already had a significant rebound. If we step into the 30-minute chart, see all the significant sell-off. I think we can recoup a lot of this today. I wouldn't be surprised if we're only recoup half of these losses. We're maybe only down 2% at the end of the day. So I think we're going back up into here. That's my view. Now, obviously, we could have plunged lower in here, but my view is this is a knee-jerk reaction. The market has come off of ahead of this support down here on the overnights, and I think we'll get real money buyers coming in and buying through the day today. So I think there's going to be a significant rebound. Do I think we're going all the way back up to basically gap lower as well? Do I think we're going to go up and fill the gap? No, I don't. But do I think we can get back up into here somewhere? Up towards like 21,400, 450, maybe even 21,500 in here today. Yes, I do. I think we could see a significant rebound. That's on the Nasdaq. On the ES, not as much damage. Again, it gapped lower and then a big sell-off in here, but like rebounding as well. So we've already had a lot of the flush out in here. The future stops would have been run and the market's already rebound. So I wouldn't be again surprising if this moves up towards back up towards the 650 area, recouping, I think, maybe half of these losses as we go into the day, looking for a further rebound. So my view, a further rebound from here. Obviously, had a knee-jerk reaction to the downside. A lot of stops probably being run. and I think we could see the market not getting back all the losses, but I think we could see it significantly higher from where it is now as we go into the day. All right, guys, I'm going to wrap it up there. Be careful. It's going to be a volatile day in there. We're going to have a volatile week. A lot of information coming our way. I'm going to wish you a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow.